Welcome to Taking Stock. I'm Amanda Lang. Coming up on the show, the IMF weighs in on the outlook for Canada's economy, and the care sector is one of Canada's biggest. So why is it so ignored? Plus, nobody likes to see taxes going up, even if it's the right thing to do. That's all ahead. First, for the week that was in business, it's time for the briefs. The federal government's increased tax on some capital gains was brought before Parliament this week. It's the first step towards its implementation. The change increases the amount of tax some individuals and all companies will pay on gains, and once fully implemented is expected to be backdated to June 25th. Canadian household net worth has hit a record high of $16.9 trillion, driven by stocks and real estate values. Household savings also rose to 6.9% of disposable income, the highest in 2 years. It suggests more financial resilience for many, but especially homeowners. The U.S. Central Bank was the latest to make a call on interest rates this week. Unlike its counterparts in Canada and Europe, the Federal Reserve chose to keep interest rates steady between 5.25% and 5.5%. Inflation was flat in May in the U.S., but the jobs picture there remains robust, keeping the Fed from lowering rates this time. Canada's banking sector will get even more concentrated. National Bank, sixth largest in the country, wants to buy Canadian Western Bank. The $5 billion transaction gives Quebec-focused National access to markets in Alberta and BC. Just a few months ago, RBC purchased HSBC Canada, which had been the seventh largest bank here. Canada's new plan to tax digital services firms could create a trade headache. This week, 11 prominent U.S. business groups called it a discriminatory tax against U.S. companies, and in an open letter to the U.S. trade rep, asked for action against Canada in response. And those are your business briefs. The IMF concluded this week that Canada has indeed avoided a recession and managed to slay inflation, but warned that governments should rein in spending as a last piece of that puzzle and consider tax increases beyond the recent capital gains tax, possibly even including upping the GST. Koshy Mathai is the IMF mission chief to Canada. Koshy, thanks for being with us. I want to start with the conclusions that you draw about the Canadian economy. Is it fair to say it's pretty positive? Inflation's under control and we've dodged a recession.
Yeah, I think that's right. Inflation was extremely high not that long ago, and now it's within the Bank of Canada's inflation target range. It's obviously still above the 2% target, but we see it returning to that target by the beginning of next year. And indeed, there's been no recession. Growth has slowed. It's now started picking up again in the first quarter of this year, and we see it picking up more robustly towards the second half of this year.
You also note in the analysis that it's important for the government to keep its fiscal spending in order. Can you elaborate on that? Are you worried that they could actually cause inflation?
Well, look, I think you have to start with the context that Canada actually has quite a strong fiscal position, especially if you compare to other countries in the G7. They were quite responsible in consolidating and tightening the deficit after the pandemic. They now have extremely low deficits compared to other countries. And the debt stock also is quite low compared to other countries. But in the last year or two, we have seen a slight widening in that deficit. They're planning to bring it down again. But we would see some advantage in tightening the fiscal stance a little bit more. And yes, that would help with the last bit of the inflation fight, but it would also help to bring debt back down more sharply. Debt, of course, like in all countries, it spiked after the pandemic, and now it's on a downward trajectory. Bringing it down a little faster would give more room in case there are downturns in the future that need to be addressed, and more space to address structural spending needs that Canada and other countries face.
And on that front, you also do address the issue of taxes that have just gone up, particularly the capital gains tax, which you think is the right thing to do. In other words, to create a little bit more of that spending power?
Well, first of all, it raises revenue, so that's certainly a good thing. And it does it in an equitable fashion. That also is a good thing. There's been a lot of discussion about the impact that it would have on investment. We really think that those concerns are overblown. We don't see that as the first order issue. And in fact, we like the measure because it improves the neutrality of the tax system with respect to different forms of corporate payouts. Dividends are now taxed more heavily than capital gains. And this measure is actually going to equalize things a little bit better and make things more efficient.
In fact, I was intrigued to see a suggestion that there could be other forms of tax increases, like raising the GST, something that was lowered a while back and might have created a bit of a structural hole in our economy.
Well, I think we do see a need, as I said before, for the fiscal position to be tightened over time. And if you ask any economist, they'll say use as broad-based attacks as possible. Economics and politics are not always on the same page. And I understand that the GST increase may not be something that's easy to implement in practice. But it is a very efficient way of raising revenues. And of course, you're concerned that ordinary citizens are affected by that. You have a GST credit that you can use in order to shield the poor and even the middle class.
Bottom line, for Canadians that are worried about the outlook on the economy, I took away from this analysis that things are pretty good. There are things that could go wrong, but that Canada's done a decent job and its economy's in good shape.
I think definitely things are in good shape right now, but like other advanced economies, there are a lot of structural challenges facing Canada over the longer run. Maybe the most important is productivity growth. And that's an area that Canada has struggled with in the past. It's necessary to address that. Housing affordability, of course, that's been a huge focus of the government's, huge topic of discussion. There are a lot of good measures that have gone in, but that's going to take time to play out. Probably additional efforts are going to be needed as well. And climate change, of course, fighting the fight against climate change is a massive priority. So there are big challenges out there in the future, but right now things are indeed looking good.
So good to have you today, Koshy. Appreciate your time.
Thank you. Appreciate it. Bye-bye.
Koshy Mathai is IMF Mission Chief to Canada. Coming up, it's one of the most important and least supported sectors. A closer look at Canada's care economy next.